Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 139, 3 Ways to Lower Taxes. Okay, thank you for joining me back on the show. I hope all of you out there are staying safe and healthy during this horrible pandemic. For today's topic, before I dive into ways to potentially lower your taxes, I have to give a disclosure that I am not, and I repeat, I am not a tax advisor. So please do not consider anything that I'm giving you as tax advice. What we do at Falcon Wealth Advisors, though, is we do offer tax planning. So that's what this is. This is conceptual, and anything that you want to do as far as impacting your potential return, you certainly want to confirm that with your CPA first. Okay. My compliance likes me to do that, right? So I got to have a disclosure out there. So again, we don't give tax advice. That's a separate registration, a separate license, separate industry, but we do tax planning as part of wealth management. And today I want to talk about 3 potential strategies that could lower your taxes. Okay. So we'll start off here with number one. Number one is maybe a little bit different. So if you're still working, okay, so if you're still employed, I would encourage you not to save all of your retirement money in a pre-tax 401k, right? And I think that might go against the grain of what a lot of other advisors say. And again, I love the pre-tax 401k. I'm not telling you not to do that. What I am trying to do is to set you up to be potentially tax diversified in retirement. And what I mean by that is using a Roth 401k feature, or if you make under the threshold, contributing outright to a Roth IRA, or just outright saving in a taxable brokerage account. And the idea is a pre-tax IRA or 401k is taxed a certain way. A Roth IRA is actually tax-free. And then a brokerage account is taxed as you go. You pay capital gains. But the beauty with these 3 different types of accounts is that they're all taxed differently. So the whole goal with this strategy is that as you approach retirement, you won't have $2 million all in a 401k that's all been pre-taxed, meaning you haven't paid taxes on any of it. And this is why it's important. Because what will happen is when you turn 72 years old, it's kind of a newer rule, but it used to be 70 and a half. Now it's 72. The IRS will force you to pull out what's called a required minimum distribution from any pre-tax retirement accounts. So 401k if you're not working, or an IRA. And it's pretty hefty. So if you have $2 million, it'll be around, $80,000, let's say. And again, it's all based on a standard life expectancy table and interest rates and whatnot, but just ballpark, it may be 80, 90,000, whatever it is, if you have around 2 million. Well, you may not need to pull that much out in your 70s. And what will happen is when you get into your 70s, you will be bumped up in a higher tax bracket. And there's not much that you can do about it at that time, right? So while you're working, certainly we want to look at a Roth IRA, Roth 401k, and we want to look at just outright savings in a brokerage account. Now, this does come with one important caveat, is that if you're approaching retirement, right, and you make a high income, right, you don't want to probably use the Roth at this point, right? So if you're within 5 years of retiring, you say, Jake, me and my spouse or my significant other, we're making over 200, 300,000 a year. We'd rather get the tax deduction now because in retirement, we anticipate being in a lower bracket. So my point is, like I said in the beginning, none of this is tax advice, but it's just something to consider as you're setting yourself up for retirement. Now, quick point on this. Let's say that you already are retired and you do have all of your money in an IRA or pre-tax. Well, it's not too late. You actually can start to convert some of that IRA to a Roth and pay some of those taxes ahead of turning 72, which again would lower your taxable income later in life. These are conversations we love having at Falcon Wealth Advisors, and we're happy to have with you. So if you want us to crunch the numbers and look at either adjusting your savings now while you're working, or if you're already retired and all of your money is in an IRA and you want to look at converting some of that to a Roth, we're certainly happy to crunch those numbers and go through that process with you. Okay, good. All right, so number two is giving to charity, right? Many of our clients are philanthropic in their efforts. However, the standard deduction to be able to deduct your charitable donations is steep. For a married couple, it's around 25,000 or so. So basically, if you don't have enough deductions, mortgage interest, other things that you can write off, plus your charitable donations every year, if you're not over that amount, and again, this isn't tax advice, but you may not be able to write it off. And so something that we have a lot of success with is using what's called a donor advised fund. And what this is another account that you basically can put 3 years, 4 years, 5 years worth of charitable donations into in 1 year and be able to potentially write that off. So let's say you put 30,000 in there or 50,000 in there, right, in 1 year. Well, the good news is anything that you're above the standard deduction, you may be able to write off on your taxes versus just giving a little bit every year and never being able to write it off. Okay. So again, there aren't some nuances, whether you give cash or stock, your adjusted gross income. So we want to be aware of all of those things before we open one of these up and you use it. But it could be a very powerful vehicle for you to be able to still give to charity while being able to deduct that from your taxes. So it's a big one. There's another type of account that's a little bit more complex, but we've had a lot of success with using these as well. And they're called charitable remainder trusts. Now, again, we want to work with your CPA and an attorney to get one of these set up. But the idea behind this is you could put money in this trust, actually pull some income off of it. And then, one day if something happens to you, then it goes to the charity. But the idea is that you get a tax deduction or some sort of tax break now by opening up one of these trust accounts. So again, a little bit more expensive, a little bit more nuanced, but it is definitely another type of account that you can leverage and utilize to be able to give to charity and write off some from your taxes. All right, good. Charity's big. So again, we're happy to help with that. We talk a lot about it at Falcon Wealth Advisors, and we're certainly happy to help you and your family get that set up. Okay. Now the third one is a quick and easy one. So if you still have a mortgage, right? And I get this actually from a CPA that reminds me of it. I feel like almost every year. But if you get your mortgage and you normally pay, or you have a mortgage and you normally pay your mortgage, in the beginning of the month, right? A good practice is to go ahead and roll up that January payment to December, right? So as you're getting close to the end of the year, I think you probably just need to call your mortgage company or mail it in and mail in your January payment early. Now, I'm not suggesting you make an extra payment. I'm just saying you make your January payment early so that it goes on 2021's taxes and it's that much more that you could write off. So again, the beauty of this is it just takes some time on your part, maybe 30-minute phone call. I don't know. But just you bump it up from January 3rd to December 20th or whatever, make the payment, then go back to your normal schedule. And you have that one extra payment that you made that you could potentially deduct from your taxes if you're over the standard deduction again. Also, the same applies for deductible health costs, right? So if you have to have a surgery or doctor's appointments or whatever, making sure that you can try to bunch all those up in 1 year so that you get over the adjusted gross income limit and potentially able to deduct those as well. So again, if you've got to have something done, making sure that you get it all organized in a year so that you can potentially write it off from your taxes. So those are big ones in there as well. Okay, good. So quick takeaway, 3 ways. So again, don't be fooled into just kicking things out pre-tax. Take a look as you're saving for retirement. Look at a Roth IRA. Look at saving just purely in a brokerage account. I am actually a huge fan of just saving in a brokerage account for many reasons. There's no restrictions on getting your money like there are with IRAs. Yeah, you pay taxes as you go. You can also potentially borrow from those accounts, which is really nice also. Our clients that have the most success in retirement have those 3 types of buckets so that they can pull from different things. But it's not too late. If you're already retired and all of your money is in an IRA and you want to look at converting some of it for Roth, again, that doesn't make sense for everybody, but for some people it does. And we certainly can look at that as well and see what that would look like for your tax projections. All right. Number 2, if you do donate to charity and you're not writing off your charitable donations, give me a call, send me an email. We're happy to go over that with you and see if there's a way that we can potentially make that happen. And then 3, mortgage interest. Again, if you are able to deduct it, bump up a payment, to December, bump up your January payment a little bit early. And then certainly if you have any healthcare costs, why don't you try to bunch all that together too? Maybe you can write off some of that as well. Okay, quick shout out here. If you haven't already subscribed, thank you so much to all of our subscribers. We continue to get more. It feels like every week. So that continues to ramp up. The best way to make sure that you don't miss an episode of Upticks is to be subscribed. I'm also out there on 4 social media platforms. So I'm on Instagram, Twitter, LinkedIn, and Facebook. Feel free to send me a friend request. I love building out my network and meeting new people. So if we're not already connected, feel free to do that. Also, Falcon Wealth Advisors is out there on social media as well. They're on the same 4 platforms. So we're out there. Our company is out there on Instagram, Twitter, LinkedIn, and Facebook. Quick shout out to my business partner, Corey. If you haven't checked out In the Money Insight lately, I'm so happy. He actually spent some money and got some new intro music done. And it sounds great. It's so much better than what he had going before. So I'm really happy for him. But again, if you want your double dose of Falcon Wealth Advisors organic content, check out Corey's show, In the Money Insight, where he's doing relevant retirement investment topics as well every week. For my fun topic, as of the recording of this, I'm recording this on a Friday, and on Sunday, Rachel and I have our first fencing tournament. So for all, I haven't told that many people that I picked up fencing all around January. And when I originally met Rachel, she said that she always wanted to learn how to fence. So for Christmas in 2020, I bought us all the gear. So we got the mask, the jacket, the swords, and all of that, the glove, all that stuff. We signed up for fencing lessons, and 3 or 4 months later, we have our first tournament. So I'm anxious. I'm excited. Hopefully we can post some pictures of some action in there. It's a lot of fun. So if you haven't tried it, it's for all ages. They have older people, they have younger people in the classes. The instructors of where we go are phenomenal. They really take the time. You can tell they really care about helping people and coaching people. So it's been a lot of fun. It's a good, healthy exercise that you wear a mask, right? We actually wear a mask under the mask, right? So I feel very safe in that environment, and it's a whole lot of fun. So with that, like I said, I hope all of you out there are staying safe and healthy. Hopefully you're enjoying some of the spring weather in Kansas City. Thank you so much for tuning in, and I hope you have a great week.